Hi there, I'm Mark Sebastian, founder of OptionPit.com, and this is the AM Volatility Report. Reminder, this is for education purposes only. Now, this should be considered investment advice. Options have risk. Consult your financial professional. Well, hey, we did a webinar last Thursday on trading stock and options after earnings. So, because earnings season just ended, I lay out exactly kind of how to read the tape, how to read volatility, how to react to the market's reaction to an earnings report. And it was really compelling. It was something I had sat down and I'd always kind of traded on, but I'd never actually put pen to paper. And I think people left I think they enjoyed that webinar a lot. So you can go to optionpit.com/events, scroll down a little bit, and you can watch the webinar. It's also on YouTube. In addition, we've got our next special, our Saturday class, except for it's going to be on a Thursday, September 14th, starting at 7 Eastern Time, 6 o'clock Central. And that's going to be a professional approach to trading options for direction. It's going to be a new take on directional trading. One, directional trading's changed a lot. Two, there's a lot for us to cover. So it's going to be a pretty nice course. Going to be 3+ hours and lots and lots of actionable stuff. Speaking of actionable stuff, how about the market? Well, here we are, and as you can see, North Korea had a hydrogen bomb, and the market is off less than 7. The Russell 2000 is now green. The NDX is basically flat. The weakest index is the Dow Jones Industrial Average, which is soft. So, there's that. And, we're going to look at SPX, see if there's some interesting plays. We're also going to play with VIX because why not? VIX futures are really, really, really bid relative to kind of the move. The VIX futures closed 1260 on Friday, which, given that they have 2 weeks to go and the VIX is 1160, in and of themselves was a really good price. Now they're pricing themselves still up on what is mostly a weekend adjust. After a long weekend, I would expect VIX to be up about a point. So we're really only seeing about a 0.5% increase in volatility right now. The S&P, like I said, down 7. There's not a great reason to see things up very much. But VIX is up. With that, as you can see, Apple has their iPhone announcement coming up on the 12th. That's a week from today. We're going to spend a little time looking at that. That's going to be one thing we play with. I have noticed that Apple and Facebook have kind of separated from the Amazons and the Googles and the, Netflix. I really don't think belonged in the FANG group. I always called it a GAF: Apple, Google, Amazon, Facebook. But the A and the F have been very different from the A and the G, if you will. And I think that's something that is worth watching, is how those two separate themselves, because they have a different risk profile. I think Apple and Facebook don't have antitrust issues. I think Amazon and Google do. Next, you've got your financials, which are soft today. Why? Well, take a look at bonds. TLT is up big, and that's on a couple of things. The Fed ain't raising rates, is not going to happen, and North Korea. I mean, it's a flight to safety. Bonds are strong. It makes sense. Then, looking at UVXY and VXX, they're stronger this morning. Might be an opportunity to fade those. I don't see that lasting unless we get a real push lower, which so far we've been open 35 minutes and have yet to see a real push. If we do get a push, it'll be within the next 10 minutes. But right now, the real softy is the Dow, and that's mostly related to Goldman being off 2.5%. Goldman is getting smacked. Goldman and JP Morgan. JP Morgan off 1.7, Goldman off 2.5, and that is entirely on interest rate risk. So the Dow's kind of its own thing. That's what you get with a price-weighted index. But you can see the S&P and the NASDAQ kind of tell the true story, and even the Russell 2000, which is green. VVIX is bid coming off the weekend. That makes sense. Anytime you get like a little movement, a strong move in the VIX futures, you're going to see VIX get a pop. So we may play and look at some some butterfly plays or some interesting stuff in VIX. And then finally, I want to look at the refiners. Oil is up, even though there's a glut of it. And the refiners are in a position to kind of sell gasoline at a premium. That spread is going to widen for them. One of the nice things about being a refiner is that it's easier to raise prices quickly and typically prices the other way don't drop as quickly. So they're going to be in a position, believe it or not, to make up a lot of ground off of the hurricane and maybe more. So they could be interesting. The whole oil versus financials trade could be a trade with lots of funness today. Let's just put it that way. On the whole, feels like we're gonna maybe not go green, but I'm not sure how that we get a lot more red from here. VIX is going to end the day at green, but VIX futures I think, will soften to flat. I think you'll see the VIX futures get to, maybe back to 1260 where they opened, and VIX maybe to 1110, 1115. We'll see some softness. That's the way things I think are lining up right now. Obviously, we'll see. Things can change. But these VIX futures look a little overbought right here. And that's kind of the way things are lining up. All right, folks, if you have questions, you can email me, marketoptionpit.com, or call me 888-TRADE-01. Have a great morning.